Hello folks, this is David Schlossberg from Assured Concepts Group with an educational economic update for March of 2017. In this month's video, we'll discuss some of the major headlines that influenced markets in February and provide insight into what these developments can mean for you as an investor. February was a month filled with record highs in the domestic markets. The S&P 500 and the NASDAQ both hit a number of new highs last month, while the Dow went on a record-busting streak. In fact, after reaching 20,000 for the first time ever in January, the Dow hit record highs every trading day between February 9th and the 27th. The last time we experienced a string of records like that was in 1987, and this is only the second time it's happened in the past 120 years. Seeing stocks rise like this can be an exciting experience, but I want to caution you to not get caught up in the euphoria. Just as emotion has no place in investing when the markets are volatile and challenging, the same rule also applies when markets are growing. So let's dive deeper and review some of the fundamental data that we learned in February to better understand where the economy stands at this time. On the labor front, last month gave us somewhat mixed data. We received the January jobs report, which showed that the economy added far more jobs than experts predicted and continued its 76th straight month of growth. But on the other hand, hourly earnings in labor and labor force participation each increased by only a small margin, while unemployment was also up slightly as more people entered the workforce again. Ultimately, the job data released in February indicates that the labor market is growing, but the pace is still not what many people would prefer. Another area where we saw modest growth was in the revised GDP numbers for the fourth quarter of 2016. Each quarter, the Bureau of Economic Analysis calculates the U.S. gross domestic product, or GDP, which we call it, which is the total dollar value of everything that people and businesses produce during that period. This measurement is a critical indicator of our economy's health, so investors and financial analysts watch its changes very closely. And because the Bureau receives updated data after a quarter ends, they release 3 GDP numbers over the course of 3 months: advance, preliminary, and final. In February, we received the second, or preliminary, reading of the GDP for the fourth quarter of 2016. Consensus was that the reading would increase to 2.1 from the 1.9% growth that was in January's advance report. But in reality, the reading didn't change and it stayed at 1.9%. For comparison, the third quarter GDP for last year came in at 3.5% growth. Rather than indicating that the economy is slowing down, however, just one aspect of GDP contributed the most to the decreased growth: lower net exports at the end of 2016. Trade is integral to our economy, so maintaining a healthy trade balance is key. As the political environment evolves, changes to our trade deals could affect this balance, and as a result, it could impact our GDP on a going forward basis. For now, no one can say what new policies may be on the horizon or if the markets will continue to reach even greater heights. So we will continue to analyze the data and search for the most thorough view of our economic standing. This perspective is the foundation of our support, and we are here to help you find a clearer perspective amid the hype. That's all for this month's Educational Economic Update. Please remember that nothing we talk about here is a recommendation, and if you'd like to discuss your personal financial situation, please give us a call at 847-426-1077. We're happy to talk. Once again, David Schlossberg for the month of March 2017. Thank you.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.